Hello Cent Warriors. In today's video, we're going to be talking about Mansa-X fund. I have had a privilege of chatting with one of the senior financial advisors in Standard Investment Bank in charge of global markets called Anthony Kimanthi. He's going to give us details about this fund, the Mansa-X, the foundation, the governance structure of Standard Investment Bank, why you should trust this fund in terms of regulation, what it invests in, the returns, and the expectation from all that. So stay tuned as we discuss about this alternative premium investment that you can take advantage of to grow your wealth. See you there.
Did my finance and investment degree from the University of Nairobi.
Right.
Did my SCCA certification as STRAP, as well. Did Chartered Institute of Securities and Investment.
Right.
I think that's the basic requirement actually to play within investment and wealth management. So now counting almost 11 years in finance and investments. From fixed income, equity, stocks, generally everything. So I tend to consider myself actually of a more wealth manager than a financial advisor, because it's just financial advice is just part of wealth management. I think it's a line that I chose. I could have chosen line of analysis, data analysis, and investment decision, but I felt the deal room is better. Understanding the product, understanding the customer, understanding the market sounded better to me. And finance is big, so there's more to go for. Now for my future growth, I'm doing my master's degree in development finance. At Cape Town University, or University of Cape Town. So it's just get to go in your passion and whatever you like. So we can just I had prepared like a small presentation, which is number one. We'll talk about introduction to SIB and why is it important. And actually, we are not doing it as an introduction. We are doing it as a due diligence.
Yes.
Because when it comes to investment, due diligence is key. When you're buying a land, you will go and do due diligence. Important for any investment that you are consuming, you do due diligence of the fund manager. So here in this case, SIB is subjected to due diligence because they are the fund managers of Mansa-X fund. Then we look at profiling, that is investment profiling. In line with capital preservation and again return and objectives, again, because I normally say that investment will make sense if
I'm losing you. I don't know whether it's my internet or it's internet from your end.
You can get me now?
Yeah, I can get you. There was a bit of a lag there.
Okay. So I'm saying investment will always make sense if you have an objective. Could be it's your retirement plan, could be education plan, could be a certain asset that you want to acquire. So it will make sense then if you have an objective. People do not really invest for the return. There is a reason why the return. Why do I need to do that? It's the same thing. We do not work for money. We work for money, then what? There's something else we want to go for. So what is what you go for. I'm investing for that so that I can buy a land. So I want an investment that can accelerate me to be able to acquire that land. Then number three, can talk about unlocking investment potentials as an investor. Then investment calculator. So simply for SIB, definitely when we are looking at most of these investment fund managers, like for SIB, the bank was started by James Wangunyo, the guy you're seeing there.
Yes.
who is we can say is in the group of the pioneers of investment industry in Kenya. We are talking of Akina James Wangunyu, Akina Jim Nambaru, Akina Bob Karin, and all of them have their own investment banks. Faida Investment Bank, Dian Blair Investment, all those are the forefathers of the investment industry. Himself, Wangunyu here, he was the chairman of Nairobi Securities Exchange. Then he started Standard. It was then a stockbroker company in 1995. Then again, he grew to being licensed as a fully fledged investment bank in 2003. And the journey went on. So that's the guy who started with the bank. Now, in terms of figures, when you're looking at the stability of the fund manager, SIB, there's a lot to read about it, but in terms of going direct to the numbers, in Kenya, you only need 250 million. I won't say no, you only, it's a lot of money anyway. So you need 200, and let me not say only. You need 250 million to start an investment bank. Now, in terms of shareholder capital, in this case, SIB shareholder capital is actually 850, 3 times of what is required by the regulation. In terms of the bigger business of SIB, actually, many people would ask, okay, you guys, because most of our investors will have mostly have confusion between, are you guys related to Standard Bank? And because they know them, but they don't know us. But the bigger business for all those years was in corporate finance, executing a lot of transactions in corporate finance. The latest, the most of the things people can relate would be acquisition of National Bank by KCB, acquisition of Kenoko Bill by Rubis, privatization of Intercon and Hilton Hotels. So that's the major business where we have been able to do 260 billion of that area. Then we are talking of managing 23.9 billion in shares and equities. Actually 21.9 billion in shares and equities. That's another major part of SIB for investors who are going for shares and all those. Both locally and Africa region, then they understood SIB from that stockbroker. Then now Mansa-X, as at the update of this record, it was 32.9 billion. Now we will wait to see the new fact sheet, which should be coming either today or on Monday, how far then the fund is. So that's SIB in terms of numbers.
Quite impressive.
Being a member of Nairobi Securities Exchange, CDS, SC, being a member of CASIP, a member of Nairobi Securities Exchange. So it's a well-versed bank in terms of how it's running. So this is the board. Himself here, James Wangunyu, is the founder. Then Job Keumba. Actually, Job Keumba is also the former CEO of Nairobi Securities Exchange. Which is more of a backup. It gives you now, okay, it seems now the entire industry is. So yes, the both are actually the forefathers of investment industries. Then you can see Donald Wangunyu, actually is a son to Wangunyu. Then Pauline Mwai, Nashon Mungai. Pauline Mwai is the executive director in finance. Then Nashon Mungai, we joined the bank in terms of global markets division, which now brought up came to be because of Mansa-X fund. Then Nicholas Wangunyu, who is now the strategy and operations executive director. Then we have Abdullahi, who is the head of Islamic banking. Actually, SIB is the first Islamic investment bank in the region.
I see.
So it's just all about creating Sharia compliant investments. Their first product being Mansa-X Sharia. So the bank is standard SIB Naja, which one of their product is Mansa-X Sharia, and they will continue developing more products that will be more of Sharia compliant for the Muslim community. Then Eric Musau, who heads the research and the research department, and Akelo, who is more like independent on the legal perspective of the advisory of the board. So to me, when you look at that board, it shows even a succession plan. Yeah, you know, most of the people will ask you, okay, what will happen? Yes, I can see 1995. This game must be a bit older now, but then what will happen after that? This shows you a succession plan.
Absolutely, I can see it's quite a solid governance structure.
Yeah. So that's strong enough. So this is the journey of SIB. 1995 as a stockbroker. 2003 being licensed as a fully fledged investment bank. Then 2008 voted as the best investment bank. Did the largest transaction in the capital markets of 28 billion for KenGen. Then another highlight is 2018 now, the opening of Mansa-X Fund. Then 2020 opening Mansa-X Fund USD. 2023 opening the SIB Naja. Then 2024 being now licensed by Retirement Benefit Authority, which gives now the bank mileage in terms of managing pensions and allowing our other fund managers to be able to play part mostly in the global markets through the expertise of our team. So that's the journey. So when you look at these are the departments within SIB. Equities at the stocks and shares. There we are managed 21.9 billion. Fixed income it's all about security, government securities, Eurobond. Actually, we are the only investment bank in Kenya that trades Eurobond. Corporate bonds, then corporate finance. That's about capital raising, advisory in the corporate finance. Then research department, global markets, then Islamic banking. So that's it. So in terms of corporate finance, this is more credibility when it comes to we look at we call this the sort of the success storm of the bank. If you look at that chart, we have actually almost served all the commercial banks, all the tier 1 commercial banks in Kenya through their various investment initiatives. KCB here in 2010 raising 15 billion. Equity Bank in 2007 raising 11.2 billion. Actually, it was acquisition. The acquisition of 24.9% by Helios UK, and then more. So you can see Stanchart there actually 3.2 billion, DTB 1.8 billion. So it's a lot. It's a lot. That's the heritage that you can say how we have been able to manage to grow a fund that we have not much advertised. Actually last year, I think last month, that we've been able to pull out the first billboard of SIB since 1995. So that's basically the profiling or sort of the due diligence of Standard Investment Bank as a fund manager, which definitely any client, any investor can do the same for any investment that they are looking to consume. So that process is standard. You can do the same for anyone that you want to do business.
Absolutely. Absolutely, Anthony. Because most investors, what we don't do is doing the due diligence. What is the foundation of the company that you intend to invest in? Mm-hmm. How is the board, structured? What milestone have you conquered by the time you are, you're getting where you are? So that's quite a good foundation, which also gives the strength and also the authority to SIB. Right, Anthony?
Yes, you can get me?
Yes, now I can get you.
Okay, I normally say investment is not a transaction.
Yeah, now you are back. I can see you now.
Okay.
Right.
Okay. Yeah. I normally have say that investment is not a transaction. You don't just execute it and then that's it. It's a journey. So you need to do that investment and go sleep well, knowing I know where I put my money. I know how the business works. You don't invest and then few days later you're seeing something on social media and then you have to call people to ask, hey, did you tell me this thing is safe? So you just need to know to be able, because it's your money, it's not our money, it's your money. You really need to understand everything, and I like it when investors ask the right questions and get to understand. Because again, it has ourselves in the financial sector, we expect every investor be able to make informed decisions, but somehow they do not know, because not everybody has the background in finance. Or familiar with what then should they ask for. Everyone is a professional and they are genius in their own ways. So we really even have to teach them. That's even personally I take it as a way to tell the investor, whatever investment that you want to do, apply this way. Do this. Whether you want to go for money market, whether you want to do this, whether you want, just apply the same and you'll be okay. We'll not be able to join the people who will say, oh, they said they will be giving me 200K per month. I did not know where they invest.
Absolutely.
Yeah. So.
Yeah. In fact, I can tell you a story. You know, when you launched the Mansa-X,
yes,
there's a special fund. We haven't seen anything like this on the market.
Yeah.
And we are used to government boards, money market, trading. You know, these are the investments that we thought they are stable, or the investment which are stable in the market. But now comes here Mansa-X promising an interest, a return of over 15%. Yes. And people just, oh, where can you get such return? It's only in Forex trading. I think these guys are gambling with our money and this thing is going to fail tomorrow. So people started shying away, but they did not have the foundation of appreciating what this fund is. And now you are here. You're going to tell us what is really Mansa-X, why Mansa-X, how confident should we be? And now you have given us the foundation of the mother, the Standard Investment Bank. Now you're going to tell us, why should we trust? Is it regulated? Because people shy away from good investments. And it's not, it is out of experience where we have burned our cash out here, only to invest in funds. And we are being told that, oh, the fund itself was not regulated. The company is regulated, but the fund was nowhere regulated. So there's nothing we can do about it. So we have had such experiences as investors. So take it away. Give us the journey of
a good thing. You know, one thing we say, Mansa actually it's not. We'll say we cannot actually brag ourselves to say we are genius enough to structure Mansa-X fund. It's just bringing all together those investment products out there. The only creation of Mansa-X is diversification, nothing else. Because it has just brought the government bond in the basket. It has brought equities in together. Because previously we knew if I want to invest in equities, I would either go buy shares. Personally, I go acquire a certain company, or I go invest in an equity fund, which has all things to do with shares. If I need something that is more safer, then I would go to money market fund that would give me something to do with fixed deposit, so now in terms of fixed income, you can say, okay, now I'm going to do a fixed deposit, but you realize fixed deposit is a single asset, but I can consume same fixed deposit through a money market fund that has extra something else that gives me a diversification, which which adds to security. People say I call it the basic principle of finance. They are the risk, they are the return. That's the basic principle. Everyone should know that. But diversification brings lower risk and higher return. And the diversification sounds like a bigger thing. I like putting it way simple. If Alex, you open a shop, and in your shop you put in unga, okay, and then I open a shop, and I put in unga, sukari, salt, mafuta, kiberiti. At the end of the day, you can only sell if mtuanga comes to your shop, okay. But yeah. I will make money if mtuanga does not come to my shop. A salt will come, kiberiti will come. All those, by the day is over, I'll have made sales because I have more product to offer than you do in a single shop with one commodity. That's diversification in simple terms.
Sure.
That's now, before we complicated it, that's what was the business of diversification. Now it sounds so fancy because it's used in finance, but our ancestors used to do the same. They will have goats and they will have cows. So that's diversification. They will plant maize and they will plant beans. That's diversification. So it gets to tell you that, okay, I'll be able to harvest my beans earlier than the maize. So I already have a produce. Okay, so that's diversification. The same principle now applying in a more complex, simple way. So Mansa-X is just offering you diversification, which again lowers the risk of this product that because if you are going to do equities are risk. I mean, no one will guarantee you your money in an equity fund or stocks. But now when you're pulling it together into an investment that is of that diversification, then you're able to say, okay, the risk is way low now because in that portfolio, in that basket, I have government bonds. And not the beauty of all the Mansa-X is that it's not just government bond in Kenya. You're talking of the entire global market. So now it triggers the mind to ask, okay, what exactly can happen for me to make loss in Mansa-X? But personally, I tend to think like it would mean the entire world has stopped. Fixed deposits globally are not paying. Government bonds globally are not paying. Because at some point, you look at our fact sheet, at some point, we are holding government bonds of the US, we are holding government bonds of German, the beauty of Mansa-X. Now, the origin of Mansa-X is just to give investors that bigger diversification, a better return. Before Mansa-X, we were used to 10% returns, which is slightly just maybe 2 or 3 above the inflation rate. So simply you've earned 2%. And literally, while you're earning 2%, the institution that is actually operating your money is earning more, probably 10% higher than you from your money. So now you get to understand when. So simply, Mansa-X is bringing you diversification. It's an investment fund that just getting back to where we started about 3 things to ask: security, liquidity, and return. In that order. Number 1, is my money safe? Because I have $1 million. That's the only money I have. The return you're telling me, it's not my money yet. It will come, but the one I have is what I have. Then how can I access this money when I need it? So in line of defense for security, regulation is important. Whether you are going for SACCO investment, whether you are going for any investment regulation, if you look at any financial product in Kenya, it's regulated. That's how safe we are, and that's how we pride ourselves as a country to say that we have a strong financial system. So if you go to SACCO, there's ASRA. If you go to retirement, there's RBA. If you go to insurance, there's Insurance Regulatory Authority. So all the CBK is there for banks. So that's there. So it's important for now investor to get to understand how it works. Because again, if you're really taking an investment that you do not understand, you're actually gambling as an investor. Because
absolutely.
you're gambling.
if I'm new and you tell me
Yes.
that we have a fund Mansa-X, yeah?
Yes.
A person who have not interacted with this fund,
Mm-hmm.
you have told us that
Yes.
it's a diversified, fund where you bring in different types
Yes.
of assets in one basket to ensure
Yes.
that you minimize the risk of that investment.
Yes.
So typically, when you're talking about Mansa-X, it is that diversified fund. Yeah? We are used to capital preservation as a risk mitigation, where you put money and you expect that, hey, my 1 million is safe. I can expect any return, but the amount I invested is safe. Does Mansa-X play that role of capital preservation? Is it part of the pillars that you have talked about?
Yes.
Yeah, so your capital will preserve. You can be comfortable that the capital is not going to be eaten off by, when the fund is not performing.
Yes. So when it comes to regulation, and let me just pull this one. Now, when it comes to regulation, this is what you expect one to see here.
Yeah.
When you're talking about investment being regulated, it's not a one-man show. Now, you'll find that in that investment, there are 5 institutions that are playing independently to protect or to safeguard the interest of the investor. Now, number one person will be the fund manager. And the fund manager, like for here, Mansa-X, we are here to do the job. That's why we charge fees. Okay.
Yes.
So we literally do not collect the money. For us, it's just to do the work in terms of where do we put this money for a better return of whatever we promise to, and operate within the investment statement policy when we are structuring this fund. Then you will find a trustee. A trustee naturally in this structure is considered to be a legal owner of a fund. That guy can sue for the interest of the investor, or can be sued for the interest of the investor. So again, then we have a regulator now, the bigger boss. Then we have that's providing oversight. Then we have custodian. The role of custodian is to safeguard investors' money. You'll not find that Mansa-X money has been directed to crypto. Crypto is not one of the asset classes that Mansa-X invests in. It does not invest in real estate. So you'll not find that it's 10% of assets under management is in real estate. So it just follows why the purpose of this custodian account, and if there is an instruction to direct this money, does it meet the purpose of that custodian account? Then the auditor is there to certify the financials and give credibility to the financials of that fund. So that's an one line. Then ask yourself, okay, where do you guys invest? That's another question. You ask, okay, you are regulated, fine. The regulation now, you can do due diligence of all these players. We've done a few of actually here in this regulatory structure. What you need to look at more is the fund manager. For the trustee, you really don't have to. They are all licensed by all regulators. That's okay. Anyone to be selected as a trustee, job done by the regulation. For custodian, at least has to be a tier 1 commercial bank by size. So mostly the fund manager, who they are. Then you can look at where do you guys invest. If you look at Mansa-X itself, because locally, we are talking of a fund that invests both locally and global markets. Now, the only aspect that is new in here, it's just the global markets. The rest is what is here. Cash and cash equivalents. That's simply by definition money market fund. Yeah, that's simply what money market fund is. Then come to fixed income. Fixed income is government bonds. Yeah, government securities and the rest. Then come to NSE derivatives, exchange traded funds and ETFs. Now we have gone to actually the equity fund aspect of it. So we've actually combined the 3 unit trust funds or unit trusts into one. We have money market here, we have equity fund. Definitely that becomes a balanced fund. Then globally, we are talking of investing in single stocks and stock indices, mostly in the global markets like the New York Security Stock Exchange, London Stock Exchange, Frankfurt Stock Exchange, and Hong Kong market. So those are some of the major markets we play in the fund. So that's then fixed income again is the stocks of any country globally, government securities and all that. Then derivatives in the global markets, precious metals like gold, copper, and the rest. Then currencies. Hi, Alex.
Hi, I lost you.
Okay, sorry.
Yeah, we were at the investment side, the asset.
Yeah, so the asset allocations of the fund, as you are seeing it, it's what you would be. So talking of wait. Try
okay.
to do this. Okay. So yes, globally now we are talking of single stocks and stock indices. That's in the markets of New York, London, Frankfurt, Hong Kong, and all that. So fixed income is government bonds of any country. Globally, derivatives. Then we are talking of precious metals, currencies, mostly the G10 and commodities like sugar. So with that portfolio, all that. Now, if you look at all these investments, what you are seeing there in terms of basket of it has everything that you can consume individually. Like you can say, okay, I'm going to buy government bond, it is here. Okay, I want to do a fixed income, cash and cash equivalent is here. I just want to deposit my money in a bank and fixed deposit there, it is here. I want to do shares, it is here. So literally it creates that basket that gives you that low risk, especially for mostly the traded assets. Now, another thing is special about Mansa-X, by definition, it's a multi-asset strategy fund. Strategy means it's an actively invested fund. For example, looking at 2020, COVID was, I think, when we are talking about Mansa today, it has really passed the test of time through global crisis, then through elections, that's political risk locally, and still delivered. Looking at 2020, being able to deliver 18.75 during COVID-19 was actually a bigger confirmation of how Mansa-X and what Mansa-X is operated and what it is. So a lot was happening. COVID-19 was literally not a crisis, but also an emergency. Just appeared. No one had a plan had planned for what to do.
Yeah,
but here it comes, and then a lot of sectors are affected. But now on a global market, look at the pharmaceutical sector. Look at the tech sector. Now we are having meeting on Zoom. I won't lie that I knew Zoom before COVID, but I know now. We will start working and schooling from home. All that. Look at gold. Anytime we have such crisis, gold tend to appreciate. Those are in investment. We call them. They preserve value. It's more of insurance when it comes to investments. Then. And then it just shows how actively the fund is. Now, in terms of the strategy we apply mostly on the traded assets, it's long-short trading model. Long. In abbreviation, we call it long position. Long position simply, if you're going to buy stock or any index, you will buy, say, 20 shillings, then sell it at 25. You make money when that price goes up. Simple as that. And mostly the retail investors have access to that. Now there's now the other side, which is short position or short trading model. Short trading model is simply you making money while that stock is actually losing. I'm sure you've heard about it. We shorted. We shorted asset. So it's like you actually did make money while the value was going down. Simply like this. You've done all your analysis, fundamental, technical, sentimental, all that, and it could tell you this asset it's overpriced. Maybe in the next few months the stock will be trading lesser than it is today. So what you will do, you will go to the market and you will put a premium and borrow. Say you want, use a case. You've done all that and you've seen Safaricom stock will be, maybe today it's at 15 shillings. Mm-hmm. Then in a month or two, it will be trading at 10 shillings. Mm-hmm. Now, what we'll do, since again, advantage of institution doing that is that we have equity division. So say you have a demand of 1 million shares of Safaricom, right? Today, that stock is trading at 15 shillings. So you'll go to the market, put a premium, mostly 10% of that stock. That is, say, 100K. Mm-hmm. Then borrow their million shares, then sell it to the demand at 15 shillings. Okay. Mm-hmm. Then what you have at that point is that Okonadeni to pay back of million shares.
Yes.
So you will wait. Then based on your research, remember what you have in the market is only a premium of 10%. No money of yours is there. So you wait until that stock is selling at 10 shillings, then go to the market, buy it, and now return their million shares. Now, the million shares you are returning at that point is worth 10 million. While you are executing that transaction, you are executing at 15 million. So simply you've made 5 million. That's the short position.
Right. Yeah, most of us don't understand that concept. When you're talking about long and short position strategies, thank you for explaining that.
Yeah, so that's it. So that's another part of how security. Mm-hmm. The rest is just features of the fund.
Yeah. Maybe you can take us through. Yeah.
Sorry.
Maybe you can take us through the features. Like the first most important question is,
yes,
who should invest in this fund? Yeah, who is this fund meant for?
Mm-hmm.
And what
as by the features of the investment, I simply say anyone who has an investable income of 250K.
Mm-hmm.
Yeah, if you have 250K that you can invest, then yes, you can. It's the same if you are earning anywhere now, even today, with the 100 shillings, you should have a money market account. I mean, everybody should have a money market account. That's number one.
True.
Even as a student in school, that's where you start. So when you build it up to 250, now you can move up and invest for a better return, where you can consume Mansa-X fund to that effect, which is, we can say, simply Mansa-X is a bigger brother of money market fund. We are all in the same, by regulation, we are in the same collective investment scheme grouping. So that's it. So for anyone, simply qualification, you can invest to 50K. That's it.
That's the minimum investment that is required to.
That's the minimum investment to start Mansa-X investment account.
Right. What about the top-ups?
The top-ups, you can top up. Mostly, it's recommended you do 100,000, but you can top up as much as first you meet the minimum initial investment. You can top up any amount from there. Because now, then we normally used to have bank transfer as the mode of funding your in Mansa-X investment account. Mm-hmm. Today, you can do pay bill through M-Pesa. So any money below 100K, you can transact more economically through the pay bill number. Just enter your the pay bill, and then you enter your Mansa-X investment account and you execute that transaction. So top up you can do anytime, as many times as you want. Yeah. So it's now your investment account to build up to whatever objective you want it to be.
Wow.
In the future.
I see. So typically the fund will give you liquidity, capital preservation. You indicated that you're going to get capital. Then the risk is also lowered because of your diversification.
Yes.
But what is this return that you are popular of? How much do I expect to get when I invest there? And is this amount guaranteed? Yeah.
Yes, for any investment, not just Mansa-X. Now, for any investment that you will be looking to go for, whether it's a money market fund or say money market fund, because personally I'm a very conservative person. I go for something that protects my money. Now, you look at the track record. At least for 5 years, get to know, okay, these guys are able to perform. For Mansa-X, we can say for the last 5 years, we've been able to deliver an average net return of 17.2%. That is after fees.
Wow.
So that's the return you're expecting. Now, this return, this chart here, it's showing you the performance of the fund year on year. The gold shade is showing the gross return before fees.
If you can share the chart.
Yes.
Yeah, I think you can share the chart. And when you speak about 17.4%, when you talk about 17.4%,
yes.
And is it net of taxes, management fees, or is the amount?
It's actually after both.
After both.
Now, yes. Now we pay because of the wider diversification of Mansa-X fund. Now, when it comes to investment taxation in investment, there's investor level and there's fund manager level taxation. Now, investor level is what typically you'll find in money market, because again, all the asset classes they're investing into are charged withholding tax. So the return they declare, it's only net of fees, but then you need to deduct 15% withholding tax to get to know how much then am I going home with as a percentage.
Yes.
Now, when it comes to our case, having the bigger diversification, there are some asset classes we are paying capital gain tax. There are others we are paying withholding tax. And again, there are other assets that we are playing in different tax jurisdictions. So now we pay taxes at the fund allocation level. So the return we get from fixed income, we pay tax on that. The return we get from commodities, we pay tax on that. So at the end of the day, the return we are presenting on the table, we only need to deduct the management fee, and then we offer the rest to the investor.
All right. So tax is well taken care of. There's no withholding tax for the fund. Yeah?
Yes.
Now, tell me, this management fee, is it on the returns or it's on the capital invested?
The 5% management fee. Actually, when you look at it, it's clear as this. If you're talking about last year, 2023, delivering a return of 18.01%, you can see the gross is 23.01. So the deduction is on the return.
On the return.
But the 5% is calculated from the amount invested. Say $1 million.
Yes.
$1 million, it will give you a gross return of 230. Based on last year's performance, that's 230,000. Now, 5% of $1 million is 50K.
Yes.
Now that 50K is one that will be deducted from the return to get you to 180,000. Yes.
See. Yeah, it's different. From a money market fund perspective, they usually is if it's 15% or 2%, majority charges a 2% management fee. Is usually on the return earned. But here you are saying the 2% is on the amount invested. That's true?
Yes. No, not really. Actually, even the money market is the same. They charge 2% of the amount invested deducted from the return. That's how it's said. Okay. 5% or 2% of the amount invested deducted from the return.
Okay, deduct from the, so the 17.4 average, it will be net of the management fee. Management fee is already taken care of.
It's already deducted. That's simply what goes to you as an investor. Yes.
All right. Right. I think that's fine. There's another return that the fund promises. I can't recall the name, but a certain 10% of, no, a management fee of 10%.
There is management fee and there's performance fees.
Oh, performance fee, right.
Yes. Now, the performance fee is what you are saying, because some of the asset classes that you are investing, we can even deliver returns beyond our target return. And what you're saying, and the bank will put an annual rate of what? Of 25% on the Kenyan, 25% on the Kenyan shilling investment, and handle rate of 15% on the dollar investment. Now, what that simply means, say for example, we deliver a return above 25%. Call it 30%. What will happen in that case? That we will charge the normal 5%. Now, simply from that 30% return, you as an investor, you'll receive your 25% first, your share. Okay. Then the percentage above 25%. In this case, when we earn 30, it is 5%. Okay. So this 5% is what now the bank will take 10% of that and you get 90. It's simply profit share.
I see. Yeah, I think you're frozen. Anthony, I can't hear you.
Of what is above 25%.
Yeah, I lost you for a few seconds there.
Yes. So what I'm saying,
yes,
when you apply the performance fee, will only apply if, say, if we deliver any return, we deliver above 25%. There will now be that aspect of profit sharing. In the case, say for example, we deliver 30%. Happen in this case, number one, you'll allocate 25% to the investor. Then the percentage above 25% will be shared now with the bank. The bank will take 10%, then you will get 90%. So
I see.
It's simply profit sharing for that stellar performance.
Okay.
Yes.
That's good. So these returns are not guaranteed. So it depends on the market performance. But you have the highest promised return is 25%, and if it goes beyond that, you now share that return, right?
Yes.
I think that's quite interesting.
And again, you see now, this I don't think there's any investment that has a guaranteed returns. Tell me one, Alex.
I think maybe the insurance, but not investment.
Even there's no insurance policy for investment products.
Yes, no investment that is
the same as with $1 million shillings. If you start a business, there is what we call sweat equity. You trust yourself that you are going to run that business for you to get a return. That $1 million does not disappear. The same thing when it comes to investment, you have to do the due diligence, how the whole thing is working, and then for you to be convinced anyway, by then it will be a bit not so easy to lose that money. Why? There's a regulation. There is all that applies in this.
Yeah, true. That's quite good. Now
that's good, Alex.
Yeah. So the other thing I would like to know is, do you have, how are you doing in the market? Do you have any other competitors that are here in the market, and how do you start, vis-a-vis them? What are your competition in the market, and what makes you better than them?
Okay.
Yeah.
the competition is a lot. There is a lot of investments that can do, but on a global perspective, directly today we have, today, Alex, everything has changed. Look at commercial banking. Every commercial bank is starting subsidiaries of investment banking. Yeah. Today we have KCB Investment Bank. We have NCBA Investment Bank.
Yes.
Almost all the banks in Kenya are now starting money market funds. Why?
They want to share the cake, right?
Is it not really? They have the cake actually. They have the cake. What they are trying to have is it that the era of conventional banking is over? The guy who used to do fixed deposit as an investment is not going there anymore.
True. There are better returns out there.
There's a lot of liquidity leakage. While Mansa-X is growing at 38 billion, that money is coming from those banks. They have to protect that capital. They have to offer something alternative.
True. It makes sense.
So literally, we have all that. Then we have now we are talking of the Faida Investment Bank is starting as actually their own, call it Mansa-X or Global Market Fund replica, OC fund. You might have seen a lot, but I know you are vast in terms of what's happening in our markets.
Yeah, absolutely.
That's a direct competition. It's actually, I don't think it's a competition, but a validator or validation of, look, there's global markets that everyone needs to consume. Being licensed by now by Retirement Benefit Authority, that's again another assurance of all this.
Absolutely. And when I saw that fund, it was licensed in 2024. It was a validation to Mansa-X, just the way you have said that we did not know of any other fund existing. So we were not sure about, are these guys legit? Why are they special? But now, seeing other people are coming up with such funds, it means this is working and this is real. And we can also exploit this market.
Yeah.
Which is good. Now, where do I start to join Mansa-X?
To start it, you play part whether you're a corporate individual. So there's an account opening forms to fill. Once you fill that account, you provide the necessary KYC. Then we'll sign up the account and send you your specific Mansa-X investment account to invest, to make transfers. Any transfer you do to that, you get a confirmation letter.
All right. You don't have any online portal?
Not yet, but it's a discussion that is with the stakeholders, because again, say we have the portal on application. You see, now we do valuation of this fund on a quarterly basis. So it means if we have that portal, the information displaying on that portal will be the previous quarter statement until we update it after the valuation in the next quarter, right? Which automatically you receive that statement at the end of the quarter. So again, value for money.
So every quarter I receive a statement
automatically.
Okay.
Like today we've shared all the statements of quarter 3.
Oh, excellent. Now, before I forget about the compounding, the power of compounding, does your fund compound the returns? Does your fund compound the returns?
Yes,
is
on
it
a quarterly basis,
daily, yearly?
We do compounding on a quarterly basis. Yes.
Okay. That makes your cash grow better than the fixed income or annual compounding.
Yes.
Well, unless there's something else that we don't know about the fund that you'd like us to know, I think you have answered most of our questions.
Yes. Anything else? You just need to experience the fund.
Yeah.
That's it.
Yeah.
What you haven't done is what you just need to do.
Absolutely. And I know you have a lot of information.
Yes, and all this information is public. Usually, every information about us is public. You can just simply walk to CMA and you get to all the clarification about the fund.
Uh-huh.
Yes.
Yeah, I like the way you share information. You get quarterly statement, you do a video, highlighting what is going on during the quarter, where you invested, challenges, opportunities. You are quite transparent, which also adds, adds that validation that it's a good fund.
Yes.
So I think that's it. That's it, Anthony. I think we'll be doing more of this. Yeah.
This is the start of a lot of conversation we are going to have.
Absolutely.
So yes, I appreciate your time. I appreciate the organization. Then we can start all this.
All right. Thank you, Anthony. I think now my viewers and my tribe will have some good information about the fund, but it's something that I'll be talking more about, and even other upcoming funds, because our interest is usually to bring awareness of what is existing in the market and the opportunities that people can take advantage of. So thank you so much. If we have more questions, clarity, people can always reach to you or me.
Yes, that's for sure.
Yeah, with all the information.
Okay. Thank you for the good job.
All right, thank you so much. We'll catch up later.
All right.
Thank you. Thank you, bye. Okay.
That's it, my people. I know now you are well informed and you are confident that you can invest in that fund, Mansa-X fund. Now, if you have more information that you need clarity on how to invest here, or there's some point that were not clear to you, you can get in touch with me. I'm going to help you through the whole process, answer all the questions that you have, and even help you invest in this fund. So until next time, see you and take care. Continue building wealth the right way. See you in the next one.